Well, gold is hovering around last week's record as investors look for stability in the markets. My next guest says that's because gold is still the best hedge against systemic risk. She's Rachel Benepe, the co-manager of First Eagle Gold Fund. And Rachel, good to have you with us.
Thanks for having me.
I know that you actually also own physical gold, right, in your portfolio,
yes,
as well as talking about gold stocks or investing in gold stocks. But it seems as if for the price of gold, the path of least resistance is up, right?
Well, it seems, gold serves as a hedge. We've always been concerned about downside risk at First Eagle, and so we've always held gold. It's just today, and really post the Lehman Brothers crisis, it's become much more obvious that the risks that are out there. And so, with the European zone having issues, people are worried about currencies. It's not really surprising that gold has become a substitute currency and that more investors are moving into it.
Who's doing that, though? Who is now using gold or starting to use gold more as a substitute reserve currency?
Well, it's actually everybody, because you see governments are starting to use it, and that's really important because when you look at gold, it's really about the float. It's a scarce asset, and so at the end of the day, if people are hoarding and or buying, the price of gold is going to move up. We're in an environment where central banks really aren't going to be selling their own gold holdings, and many are adding, as we saw with India last year. On top of that, we have many institutional investors that are starting to have more interest, and you see it in the retail. I think there's a lot of fear in the markets, and people want to protect their portfolios.
And you own 10%, right? 10% of your portfolio is in physical gold.
In our diversified funds, in our global, overseas, and U.S., we tend to hold around 10% of the fund in gold. And then the gold fund, we encourage investors to do the same allocation and to supplement with our gold fund.
And why not more than that, given what's been going on?
Well, we think if you do more than that, you're speculating that the price of gold is only going to move up. And that's not necessarily true. I mean, once fear kind of once it starts to subside a little bit, people will move out of gold. It's not always going to be a one-way trade. It's really there as a hedge, and it's really there to protect your money in the face of that risk actually coming to fruition, rather than that you should own it because it's an investment and that you're going to expect to make money.
But if you were to somewhat speculate on gold right now, I mean, given what's going on with the dollar and that being also a hedge, how do you then, I mean, can you buy the gold vis-a-vis the dollar, or, I mean, is that going to be an inverse relationship there?
It doesn't necessarily need to be an inverse relationship. Both can be safe haven assets depending on what is occurring. I mean, I think if you look right now, people are comfortable owning both the dollar and gold versus other currencies. I think people are worried about the pound. They're obviously worried about the euro. The yen isn't a great option. So in that instance, you could see both move up.
Okay. Gold stocks versus buying gold, what's the benefit?
Well, the gold stocks have actually really been lagging in terms of the gold price. So in terms of that, I think there's a lot of opportunities. The way that we think about it at First Eagle is what's the cheapest option for our hedge? And right now it appears to be the gold in the ground, i.e. the stocks. So we tend to focus on those companies that actually produce or are near production because we view it as a hedge. We want to make sure those ounces are actually coming out of the ground rather than these early stage companies where they're just drilling.
And you're finding them where exactly, these stocks?
Well, they're all over the place. I mean, the large cap names are underperforming the stock price, or underperforming the gold bullion price. So you can see Barrick and Goldcorp and Newmont, all the traditional companies, they seem to be cheap.
And you see them as set to outperform, or you just see that they're going to break out?
Well, we think that they just have an opportunity, given where the gold price is, to perform better than they are today.